Till now, we have discussed about 8 problems on valuation of shares. And in the last class, we discussed one combined problem that involves valuation of goodwill also. So now we need to see some small problems that may be asked for 6 marks on valuation of shares. So problem number 9. So see the problem number 9. Sudhir Limited has 50,000 equity shares of 10 each, 8 paid up, and 40,000 7% preference shares of 10 each. Then that means what? There are two classes of shares are mentioned. One is equity share and one more is preference shares. Yes, that is given in the problem. So equity share out of which 8 is paid. So that means what? 2 is not paid. This is partly paid up equity share and fully paid up preference shares information is given. The company transfers 10% of divisible profit to general reserve every year. That means rate of reserve is mentioned in the problem and the expected profit before tax is 10 lakh. So this 10 lakh is nothing but average annual profit directly given in the problem. Then rate of tax is also mentioned, that is 35%. Then normal rate of dividend, that is nothing but normal rate of return NRR is 16%. Compute market value of equity share. Yes, so every information is given in this problem. Just you need to compute the value of equity share. Now, thing is, they have not mentioned about method, which method to follow, whether you should follow this one net asset method or market value method. So, in this case, it is very clear there is no information about assets and liabilities. That means only shareholders fund information is given and there is no information about asset. So in this case, we'll assume that we need to follow market value method. Why? Because there is a rate of tax is also given, then general reserve rate is also given, then dividend NRR rate is also mentioned in the problem. So just we need to follow the format of market value method. So in the books of Sudhir Limited, statement is showing market value of equity share. So first thing is average annual profit. Average annual profit is mentioned in the problem, that is the expected profit before tax is 10 lakh. So same thing is average annual profit. So same information you are going to write, that is 10 lakh. Less, less there is a deduction from AAP. What are those deduction? First is tax deduction, then after that general reserve deduction. First you need to deduct if there is any tax rate is given. After that you need to deduct if there is any general reserve rate is given. So in this problem both have mentioned, both the rates are mentioned. So first we need to deduct tax rate. So that is why less appropriation towards the taxation 35%. See, this rate of tax is given as 35%. So on AAP, average annual profit 10 lakh, you take 35%. That will be 3 lakh 50,000 deduction. So remaining balance will be 6 lakh 50,000. That is 10 lakh minus 3 lakh 50,000 is 6 lakh 50. Now one more deduction is there, that is appropriation to general reserve. Yes, that is on the remaining balance. Now what balance is remaining? 6 lakh 50. On that you need to take 10%. 6 lakh 50 into 10% if you do. Why 10%? Because it is given in the problem where it is given company transfers 10% divisible profit to general reserve every year. Rate of reserve is mentioned. That is why 6 lakh 50,000 into 10% if you do, you will get 65,000. So final amount or final profit available to all shareholder, final profit available to all shareholder is 5 lakh 85,000. That is 6 lakh 50,000 minus 65,000. Profit available to all shareholder is 5 lakh 85,000. Yes. After this, we want profit available to equity shareholder. Now we got profit available to all shareholder, and in the market value method you need to deduct only dividend of preference share. Preference share capital does not appear, preference share redemption premium does not appear, only dividend appears in market value. But in the case of net asset method, if you see, there is a deduction of preference share capital as well, there is a deduction of arrears of dividend as well, and there is a deduction of redemption premium as well. But we are here following market value method. This is our question. So if you see here, preference share information is 40,000 7% preference shares of 10 each. So what is the total value of preference share? 40,000 into 10. 40,000 into 10 if you do, you will get a preference share capital. What is our preference share capital? That is 4 lakh. 4 lakh into, we want dividend. We want a dividend. So 4 lakh into class of preference share. What is the class of preference share? Yes, 7% preference share. That is why 7%. See this, 4 lakh, 40,000 into 10 into 7%. That is 4 lakh into 7%. If you do, you will get fixed dividend amount. Why? Because preference shareholders are entitled for fixed dividend every year. That is why 28,000 is a fixed dividend for this particular year. So after that, you can get the final amount. If you can get the final amount, that is profit available to equity shareholder. How to get? From profit available to all shareholders, deduct fixed dividend payable to preference shareholder, 28,000. Final amount is 5,57,000. So now we know the profit available to equity shareholder. After this, we need to calculate capitalized profit. So formula for capitalized profit is profit available to equity shareholder divided by normal rate of return into 100. Normal rate of return given in the problem, that is 16%. 16% is a normal rate of return given in the problem. So just substitute in the formula. Capitalized profit is equal to, that is profit available just now we know, that is 5,57,000 divided by normal rate of return is 16 into 100. So total capitalized profit is 34,81,250. But we want to value per share. How to calculate value per share? Capitalized profit divided by number of equity share. So this is the formula for value of share under market value method. So capitalized profit answer just now we got, that is 34 lakh 81,250 divided by number of equity share, that is 50,000. Why 50,000? Because it is given in the problem 50,000 equity shares. So doesn't matter if it is a partly paid, also doesn't matter, because in this problem specifically they have mentioned about 50,000 equity share. That is why we need to take entire amount 50,000. Yes, so value per share is 69.63. If you divide, you will get value per share. That is value of every single share under market value method is 69.63. So very simple problem. This type of problem comes for 6 mark. This is a problem asked for 6 mark. So any doubt regarding this problem? Problem number 9. Valuation of equity share under market value method. Very simple problem for 6 mark. Yes, everything is mentioned. Rate of tax is given in the problem. Rate of dividend is, that is dividend rate, class of preference share is mentioned in the problem. Then general reserve rate is given. Normal rate of return is given. Preference share capital is given. Average annual profit is given. So everything is mentioned. Just you need to follow the format and substitute amount in the formula. That's it. So I hope there is no doubt regarding this particular problem. So any doubt regarding this one, you can ask me. If there is any doubt regarding this problem, you can unmute yourself and answer, or you can comment in the chat box if there is any doubt. Any doubt? No. Rajat is saying no. What about others? Shifali is saying no doubt. Yes. So I hope others also have no doubt regarding this problem. Swati is also saying no. So now we'll discuss one more problem. Next problem, that is problem number 10. Problem number 10, if you see, that is of Mr. Ravindra. Mr. Ravindra. So, yes. So now let us discuss this problem. Mr. Ravindra holds 5,000 equity shares in Ganesh Limited. That means Ravindra's shareholding, that is person SSE or Ravindra's shareholding is 5,000 shares. Paid up capital of the company is 30,000 equity shares of one each. So what is the total share capital available in the company? That is nothing but 30,000 itself, because face value is 1. So 30,000 is company's share capital, that is equity share capital or ordinary share capital. It is ascertained that normal profit of such company is 5,000. So this normal profit is nothing but average annual profit. Average annual profit is directly given in the problem, 5,000. The normal rate of return for similar type of business is 8%. So this is nothing but NRR specifically mentioned in the problem, that is 8%. Mr. Ravindra requests you to value his share based on the above information. Again, here they have not said which method to calculate, how to find out. There is no information about asset. Only they have given NRR and normal profit. That means what? It is very simple to understand. We need to follow market value method. Why market value method? Only shareholders fund information is given and no other information is given in the problem. In order to calculate net asset method, we want asset information, we want liability information. So that information is not there in the problem. That means liability information means external liability information is not given in the problem. So we can find out the value per share only with the help of market value method or yield method. So now let us do yield method. Just we need to follow the format of yield method. So solution part, in the books of Ganesh Limited, statement showing market value of equity share. So first one, average annual profit. Average annual profit is given in the problem. See this, that is nothing but normal profit of such company 5,000. So 5,000 directly you are going to write. From that, less appropriation to taxation and reserve. But in this question, they have not given any information about rate of tax and rate of reserve. That is what amount to be kept aside each year as a part of reserve. That is not given. And tax rate is also not mentioned. That is why nil. Less appropriation towards tax is nil, reserve is nil. Suppose both the information is given in the question, then what you are going to do? Then you are going to deduct the first tax rate. First you need to deduct the tax rate. After that you need to deduct the general reserve rate. So that is a format. So don't deduct general reserve first. First you need to deduct tax, then general reserve. But in this question, no information. That is why nil. So profit available to all shareholder is 5,000. So average annual profit itself is the profit available to all shareholder. So from this you need to deduct fixed dividend payable to preference shareholder. Again, preference share capital information is also not given in the problem. Only equity share capital information is given. That is why that is also nil. So final answer, final amount is profit available to equity shareholder. Profit available to equity shareholder, that is 5,000. So you can say here average annual profit itself is the profit available to equity shareholder because of no adjustment in the problem. So after this we need to find out capitalized profit. Formula for capitalized profit is equal to profit available divided by normal rate of return into 100. Profit available we know that is 5,000. Normal rate of return is given in the problem, that is, say this, 8%. So we need to write 8 in the denominator into 100. So capitalized profit will be 62,500. Lastly, we need to calculate value per share. Value per share under market value method, you know, capitalized profit divided by number of equity share. If you do the net asset method, what is the formula for value per share? Under net asset method, the formula for value per share is equal to net asset available to equity shareholder divided by number of equity share. Yes, so that you need to remember. So now we got capitalized profit answer 62,500 divided by number of equity share. How to calculate number of equity share? Once you see the problem, there it is given 30,000 equity shares specifically. So you need to take 30,000 as it is. 30,000 as it is in the denominator. So value per share is 2.08. Okay, but Mr. Ravindra holds 5,000 equity share. So now we got the value of one share. Now we got the value of one share. Now we want to answer for 5,000 shares of Mr. Ravindra. So how to calculate that? 5,000 into one share value. What is that? 5,000 into value of one share. So that is 2.08 into 5,000. If you do, you will get 10,400. That is computation of total value held by Mr. Ravindra under market value method. So this is one more 6 mark problem. So very simple problem this one. Any doubt regarding this problem you can ask me. Any doubt regarding this problem? Problem number 10. Very small problem. No adjustments at all. Nothing you need to do. Very simple. 6 mark problem. Any doubt regarding this problem? Any doubt regarding this problem you can ask me. Any doubt? Rajat is saying no doubt regarding this problem. What about Akanksha, Amrita, Anusha, Kushal, Narsimha, Nishant, Omkar, Pooja, Pramod, Rajat, Shifali, Swati? So I hope the concept is very clear. Formula you should remember. That's it. Yes. So now we will discuss one more problem. Last problem of this class. One more problem we need to see. That is problem number 11. So we'll see the next problem. Problem number 11. Yes. Calculate the value per equity share. So you need to calculate the value per equity share. 2009% preference shares of 100 each 2 lakh. So preference share capital is directly given in the problem, that is fully paid. That is directly given. Next, 50,000 equity shares of 10 each, rupees 8 paid up 4 lakh. So equity share capital is partly paid because there is, see this face value is 10, only 8 is paid. That means 2 is not paid. Annual expected profit before tax, that is 2,18,000. So what is this? This is nothing but average annual profit, AAP. Rate of tax is given 50%, specifically mentioned. Appropriation to general reserve is given 20%. Okay, normal rate of earning, that is nothing but NRR is given 15%. Fictitious assets to be written off. Okay, very important. So 4,200, this is given as a part of adjustment. That is fictitious assets is to be written off. That means from annual expected profit before tax, we need to deduct this fictitious asset because it is specifically given in the adjustment. That is why we need to deduct from profit. As a yes, after that you need to follow the simple procedure, simple format you are going to follow. Again, this is one more 6 mark problem. Yes. So now we'll see this problem, and by seeing the problem itself, it is very clear that we need to follow market value method. Why? Because again, asset information is not given, and information about rate of tax, dividend, and NRR is given, and only shareholders fund is mentioned. That is why we are going to follow market value method. So calculation of value per share under yield method or market value method are as follow. So now first one, first average annual profit. Average annual profit, whatever is given in the problem. See this average annual profit is 2,18,000. From this, you need to deduct fictitious asset is to be written off. So this amount you need to deduct from average annual profit, that is 2,18,000 minus fictitious asset 4,200. So now remaining profit is 2,13,800. So fictitious asset adjustment is similar to that of bad debts. Suppose when there is a bad debt is given in the problem, then also we need to deduct from last year's profit. Last year's profit means suppose the profit for 3 years is given 2013, 14, 15. From 15 is our previous year. So previous year profit, from that we need to deduct bad debts. But this provision is not there for reserve for doubtful debt. Reserve for doubtful debt is different and bad debt is different. Bad debt means it is irrecoverable. Reserve for bad debts means we are keeping the reserve to meet uncertain event. Yes, so average annual profit is 2,13,800 less appropriation towards taxation. So now tax rate is given in the problem 50%. So on AAP take 50%, that is 2,13,800 into 50%, that is 1,06,900, that is half of the amount. So remaining balance is 1,06,900. Again there is a deduction, that is appropriation to reserve. Appropriation to reserve, again reserve rate is given 20%. So remaining balance into 20%, that is after deduction of tax. So 1,06,900 into 20%, you will get 21,380. So after deduction of tax and reserve, final amount, that is profit available to all shareholder, is 85,520. What is this all shareholder means? So this profit includes profit available for preference shareholder also. But we want a profit available to equity shareholder only. That is why we need to deduct from all shareholders profit fixed dividend payable to preference shareholder. In this problem, preference shareholder information is given, that is preference share capital is 2 lakh. So class of preference share is 9%. So specifically you can calculate the dividend here. 2 lakh into 9%, if you do, you will get the dividend amount for one particular year. So 2 lakh into 9%, if you do 18,000, that is fixed dividend payable to preference shareholder. Now final amount, that is profit available to equity shareholder, is 85,520. Profit available to all shareholder minus dividend to preference shareholder 18,000. That is answer is 67,520. Yes, this is our format. After that we need to do capitalized profit. So capitalized profit is equal to profit available divided by normal rate of return into 100. Profit available now we got, that is 67,520. Normal rate of return is given in the problem, that is 15%. See this normal rate of earning they have mentioned. So same 15 you need to write in the denominator into 100. So capitalized profit will become 4,50,133. Next, value per share. How to calculate value per share? Same, whatever we have applied for previous problems, same formula under market value. Capitalized profit divided by number of equity share. So capitalized profit is, now we got the answer 4,50,133 divided by number of equity share. Once you see where they have given equity share, see this, even if it is partly paid doesn't matter, because they have mentioned in the problem specifically they have given 50,000, so we need to take 50,000. So answer is 4,50,133 divided by 50. If you do value per every single share is rupees 9 under market value method. So this is a normal procedure. This is a normal procedure of doing calculation under market value method. But instead of this, you can do alternative method also. Alternative method also you can follow. So what you can do here is, or if you want, you can follow this method also. Calculation of value of a partly paid share. When there is a partly paid share, you know that rupees paid up. What we are talking about here, partly paid shares means equity shares capital we are talking about. See this, 50,000 into 8, they said 4 lakh. That means 1 lakh is not paid. 1 lakh is not paid. So other method, alternative method, market value per rupee of a share is equal to capitalized profit divided by total paid up capital. Okay, this way also you can do. Capitalized profit answer you know, that is 4,50,133. Same answer you are going to write in the numerator divided by total paid up capital. Total paid up capital is 4 lakh and not 5 lakh. Why? Because rupees 8 is paid. Face value is 10, rupees 8 is paid. That is why paid up capital is 4 lakh. So divided by 4 lakh, if you do, answer is rupees 1.1253. This is market value per rupee of share. So into After this amount, you need to into paid up value. You need to multiply with the paid up amount. That is, value per share is equal to market value per rupee into paid up amount. So that is 1.1253. That is market value per share into paid up amount. We know that is 8. Face value is 10, paid up is 8. If you do this also, you will get value of a single share as rupees 9. So both answer is similar. Here also you get 9, and here in the normal method also you get value of a share as 9. You can follow any of the method, but it is better to follow normal method itself. Yes. So any doubt regarding this particular problem, you can ask me now if there is any doubt regarding this one.